there guys, glad to have you on board again today. You might have noticed the recent volatility on Bitcoin, and I did my best to support the community in French in a kind of live event as we reached out to the very hot spot which we're in, and we've been there since the latest 24 hours or so. And I'm sorry I couldn't do it any faster than that to cover this as well for you guys in English. So my apologies for this, but here we are. We still need to talk about it. We're ahead of a crucial monthly candle close, which is still 5 hours or 6 hours away from now. And therefore, this is all you should care about. So that's number one information takeaway from this podcast. There's nothing that's going to be confirmed, that's going to be said today that's going to have any value until confirmed by the candle close. All right? We're going to look at a broad set of assets to look at what the potential outcomes could be, so that once again, right before we get the final answer and the final mark by the close of this candle officially, I still want to get you guys prepared for this. So remember that anyway, we're going to have a full coverage of this with the effective candle close right by Monday, with a regular Monday, or eventually throughout the weekend, kind of weekly reviews. All right? So today is just to take on the hotspot as it's been dealt with the markets in real time. All right? Sorry I couldn't do it yesterday, but better late than never. So here we are. Bitcoin monthly chart. Remember, that's the area we've highlighted for quite some time. Shouldn't be anything new when it comes to the technical analysis. We're trading now above the resistant context. We've said that there was no possibility to buy so long as we've entered into this same resistant context that was back in 45K-ish. And we are now trading above the resistant context, aka above 58K-ish. So in that sense, that means whether this candle close is handled above or below that level is critically important. If we do close below 48K, that's a sign of rejection in this area, and that will be impending till next month candle close to figure out whether or not we succeed closing above the context, okay? The second element that we really want to talk about is the fact that we're really at the beginning of this actual context. That's really important as well to figure out in terms of timing, that this is fresh update from the context that we're actually breaking above by the second month of the year, okay? And remember, these contexts update each and every year. So we're kind of month 2 out of 12 to come, and we've already attempted to break out this level. Are we going to succeed by Monday, by January, by February, or not, is a tricky question, and we're going to get the answer 6 hours away from now. My hunch is, frankly, I don't know. If we get to close about it, the second information that I will get to process is, do we close above this kind of target? Remember that target? We had that one by by January, sorry. And this one was highlighted as well as being an overbought cluster. So we were overbought, touching the resistant contexts, failing to close into it, and we were triggering this breakout target. Most importantly, and we've longly talked about it, there's an entire podcast regarding this and the implication that this target has on a previous video right here in the YouTube channel. So I'm just going to tell the necessary information out of this one, and if you need more context, have a look at the original video. Basically, the thing in here is that this range target is different from what we could get, for example, for Ethereum, and I told you back then that we would very likely have the Ethereum's response, and it would likely create the same type of breakout that Bitcoin. But the difference, key difference, is that I don't expect Ethereum to create a range breakout target, but instead to create an opened breakout target. These are the ones that can be creating trends afterwards. That means the value can break beyond these targets, and prices may be sustained above these levels solely to the fact of a breakout. That means that doesn't pertain to the capacity of Ethereum to break through this level. That just says there is no statistical technical resistance out of this level. In terms of Bitcoin, we've clearly separated that difference with these range breakouts. Say Bitcoin can certainly keep rising through that target, but the probabilities of having sustained prices traded by the end of the target above it are narrow. So we could either range below and break through it at a later stage. We can break through it, but with a very increased chance to get back there again by the end of the target. And that's pretty much halfway through 2026. So that's really what we've said back then. This range breakout target, as opposed to a regular type breakout target, pose that difference in terms of probabilities. Probabilities not to break through this level, both can do it, but the fact that one can settle value above, meaning I move higher and I don't have to get back there, the second one says you can move higher, but you'll have to get back there. It's not a 100% chance, of course, nothing is ever for granted in markets. I hope you'll always remember that. But that's a critical factor for you to remember. That's a key difference to me in terms of risk management. And remember, once again, I don't draw these indicators manually. This is hard-coded over years of experience into trading, and the rules are what they are, and I interpret them as what they deliver to me. This output is not what I would like to see or whatever. It's just what it is, and I use it as it is. It doesn't pertain to predict the future. Remember, once again, this is all just a statistical game. But I trade according to what I see, and what I see is a different outcome for Ethereum than Bitcoin. The difference key in here is as well that Ethereum itself will have to close this candle. So still 6 hours to go to get that target to be printed. And it can very well disappear if we have a lot of volatility. So that's the crucial thing, number one. We're in an area in which Bitcoin itself is trading in a very dense technical cluster. It's both trying to break the resistant context and trying to close above it, but also trying to break through an already existing breakout target. That's not something that can be undermined. It's very critically important. So that's the rule number one. We are in a very, very important technical price area. That means we're in a speculative area on two outcomes. The first one being that we're going to build a range boundary, aka Bitcoin is going to stop rising out of this and probably could eventually do so for the next 2 years, and you need to understand what that means. That means we could very well not get to all-time highs until 2 years, and that's a very viable technical solution and probability that certainly no one is talking about now, because remember, when we're trading at the top of a range, everybody's bullish. That's just normal, all right? So don't get that one wrong. There are significant probabilities which we just reject this area. If we get to break through this and therefore closing the month above this 55, 56K-ish area could be the sign that the market wants to break through this. We already get this massive Marubutsu candle, meaning that, well, for now, the market is headed in that direction. All right, closing above the resistant context and this target would be a significant probability for the forthcoming month to keep validating that breakout or rejecting it. But the rejection will require a significant drawdown in retracing this big Marubutsu. Okay, so that's really the way to go. Though, takeaway number two is put it into context. That means in this area, there are two things that can be done for Bitcoin. Either you decide that the range is not going to be broken, therefore, if you have bought at the lows, this could be well suited for a partial profit taking, for example. Defining the strength of that profit taking, of course, depends on the technical signals that we have, and frankly speaking, we have no reason to rush to the exit door. So maybe waiting for another month or two to select whether or not you want a partial profit take on the on this tradable area. This is definitely a tradable area, by the way. The second aspect of this is if a breakout come out of this, I frankly think there are very limited probabilities for you to trade it. That means when a range is mature, you can sometimes assess for a traded breakout. There is an upward background trend, so most of those range have asymmetric probabilities. That means we have more chances to break the range to the upside rather than to the downside, and to build higher lows, and therefore higher highs are expected probably as well. But the truth is, well, this breakout signal, like we stated, doesn't mean we can't go higher. It just means if we go higher, we'll get back there. So that limits the probability for me to consider trading this breakout. So the answer to the final question is, what do we do out of this area? Option number one, either you profit take, but we don't have significant information supporting that thesis for now. Maybe next month, we'll see about that. And the other thing is that this could be a breakout area, but the signals we have contradict that probability. Or it says this is the type of breakout that could have limited rewards over time. It could settle price, but hardly will settle value above these levels until 2026. So do you really want to follow that breakout? I don't think so. So the area is tricky to navigate because you have no reasons to sell, at least not yet, and you can't buy. So that's really what it comes all down to, in my personal opinion. There's nothing for me to be done out there but to just look for potential signals on a monthly basis. Eventually, you could roll down to some shorter time frames to try figuring out more precise risk assessments, but that pertains to the monthly close anyway, which means you can risk take by going into shorter time frames and trying to figure out more dusty, nasty signals from shorter time frames, of course, this could include some problems. Remember that this is going to be more sensitive indicator detection, and if you decide to act on shorter time frames, you could very well be left behind. If the monthly doesn't correlate that by confirming it in a later stage, you might be left taking your profits before the market skyrockets. So that's really the risk for you to take. Define your own risk boundaries according to your own risk profiles as usual. But what is it going to mean for the rest of the market is the question you might wonder now, because that's the question I've been asked all along. So frankly speaking, what does that says about the altcoin performance onward? Whatever happens for Bitcoin, and we said there are two options, the most likely, in my personal humble opinion, and you do what you want with that, is that I think there are significant chances for Wyckoff pattern to emerge out of this. We're in a dense technical area that has massive implications forward. There are massive catalysts as well coming along the way with this massive ETF inclusion, and now we are getting closer and closer to the next halving. This dense technical area, with market being front-running the opportunity, could very well lead us to some form of either a distribution pattern, which means we build a closely tied range into this area before a rejection, possibly a few months from now, or we get to reaccumulate, which means we could trade narrow ranges for maybe a couple of months, maybe more, who knows, don't predict timings in ranges. So long as we're in that range, we could very well accumulate in here in a Wyckoff type. That means building some tight range, very expensive for leverage traders with high margin costs and stuff like that. This could be a very probable market forward in the coming months, in my humble opinion. So if that's to be the case, then you don't want to be a speculator into this. So my humble opinion is stay the fuck away from Bitcoin. You might want to trade elsewhere eventually, but expect also as well that Bitcoin not giving the answer is going to maximize the uncertainty parameter in the equation. And you know that markets are very sensitive to uncertainty. Uncertainty generally translates into volatility. So if the volatility is constrained by Wyckoff type accumulation or distribution and or reaccumulation, which basically sound the same and look the same technically speaking, that means narrow ranges in shorter time frames. Well, this maximum uncertainty on either a continuation pattern or a rejection pattern is going to maximize uncertainty by squaring it into the altcoins, more so to those who are very illiquid. So that gives us this kind of answer if we look at the whole spectrum of the actual altcoin markets. Of course, in a long-term basis, we don't do short-term speculative gambles in here. So that's really the way to go. We will have a look at this. We're definitely been accumulating very long in this Bitcoin season. And now the question is whether or not we're going to see altcoins shining. My whole thesis regarding this is the one that I've greatly described over the latest month to talk about this potential for K-shaped recovery. That means there's been an outrageous speculative bubble in the previous month, in which some alts have been performing like crazy, just like it was bull market over again. Frankly speaking, we can easily name them. The Cospas and Injective have gone through the roof. Absolutely disastrous terms of a market distribution for profits. Remember that markets tend to distribute profits in Pareto type distributions, which are definitely asymmetric, but in here it's absolutely outrageous, stupid. So there are assets who are partying like crazy, just like we already knew the future. A typical Pareto type distribution would more look like something like that, okay? And therefore, we would still have this asymmetric distribution. But two things that we can take away from this is that the likely distribution in here is some will revert to the mean, but that also means some are currently underperforming their relative mean. So we could see this kind of K-shaped recovery system, which means we've all gone down through the 2022 crash. Some have already recovered like crazy. Some are even trading all-time highs, just like, yeah, party all over, folks. The bull market is already there. If Bitcoin puts a stop and a dent to this narrative, I think those assets will take a hard landing back to some more rational levels. Back to the mean. I'm not saying they're going bear market territory whatsoever. Just saying the higher you went, the more violent the down move will be if Bitcoin decides to accumulate or reaccumulate or just range and not breaking all-time highs such anytime soon. That means some will be due for some severe correction. The more liquid the assets, the better. The less liquid and the more speculative the asset is, the more violent the gap in liquidity will translate into price drops. expect slippage or whatsoever. So please don't fucking trade the COSPAs, injectives, Solanas whatsoever. These assets might be very well illiquid, therefore translating into slippage, which means even if you use a stop loss, you're going to get broken through and going to have extra cost for liquidations. So be very cautious with that, more importantly if you're using cross margin or stuff like that. So very, very, very careful with leverage on those highly speculated assets, okay? Those who are pretty much trading at the mean, I think, are very likely candidates to just stay there, okay? Like just the chain links and the like, they're probably already at that K-shaped trading area. They might be very volatile though, depending on the liquidity of their assets, but they're very likely traded somewhat at the median value, and they will oscillate across this area until we get the final decision from Bitcoin. And Wyckoff can be very, very dramatically long, and much longer than your patience can handle. So be very cautious with that. It could take multiple months before we actually get a move, which means we could be in that indices of K differential area for several months starting now. And that's really the way to go. Though the K-shaped distribution at the end of it, which means out of those who will correct back to their median value and therefore have two options out of this, either they rise back again or they fall down to die. And that's basically would translate into crashes. That gives us the opportunity of those who went down, then crazy up, back to the mean and die. This is an option, okay? We will have the option of those who go crazy up, correct, and find their way up. That's also a possibility. You will see some assets looking like that, okay? There are, of course, all the other impending possibilities. You've got those, for example, who've gone down, never recovered yet, still have their work to do to recover, and then they would have those that will go down later, break the previous lows and so on. You've got those who are low, still low today, that will have to recover and will V, which means out of the decision area, they'll keep rising and break their all-time highs afterwards. These are the multiple possibilities. Of course, each asset in here has a possible equal distribution between all those things, depending on the initial conditions. So I again don't know what's going to come out of this. All I know for sure is that once again, speculation can do outrageously stupid things, but it can very less likely last over time. So some assets, frankly speaking, doesn't necessarily belong where they are. I think they could correct very, very brutally. Some other assets might be underperforming and value will sort out the right from the wrongs. I just think that once again, Wyckoff and time spending in this area is probably the best and the most pain-induced kind of strategy. Remember, the market is always maximizing uncertainty. The path of uncertainty is the way market works because it maximizes speculation and therefore rewards for those who trade. So I think in terms of trading, if we're in a Wyckoff environment, this is a very unfavorable argument for those who lack of lots of experience into trading. This is really the type of environment that favors largely those who have experience, aka market makers or experienced traders, to navigate this market because it's highly psychological and trappy for early type investors who just get basically wrecked in those patterns or either over-leveraged by the uncertainty maximization. So the TLDR from out of this, and we're going to stop that podcast right here, is just to state the obvious. When it comes to the big boys, the Bitcoins and Ethereums of this world, there is no supply. Supply is nowhere to be found. We're at critical low level of supply, which means the possibilities to just break out of this area are still significant. But the outcome of it happening or not mostly depends on the demand there is for the spot assets. If the Bitcoin event with ETF keeps on skyrocketing the demand with no supply available, and we see no improvement in terms of supply available on chain, supply available on exchanges, then the pain is just going to keep growing to the upside, and the breakout may very well happen. We have similar situation for Ethereum. So both can very well break out, and that support the thesis in which the area which we're in could very well be crossed and above, just like it was nothing, just because of an over-demand versus no available supply. And at that stage of below or close to 10% supply available, we are in the level in which the premium for each and every dollar induced in market demand to create much more than $1 in induced market cap valuation. So that's really one thing to account for. We've prepared for this for months to say this can happen, and we still have evidence that it has likely chances to keep playing out. So the breakout, as it is, looking at the fundamentals, could very well play out. It's a 50-50 game, I would say. But I think anyway, even if it does play as a breakout, I think we can hardly get along this area without at least a small portion of trading activity. I think Wyckoff is the most probable outcome there, and therefore you might want to get ready. Of course, in a fundamental market structure, okay, all that we have is supporting the monthly based time frame. So it could take months for us to get out of this, okay? And even if we decide to break out of this target, we can take a few months of accumulation, a reaccumulation, before we actually keep on pushing. And that's why I suggest potential Wyckoff pattern could play out. The additional reason to this is that we've seen the wave of liquidation that I was looking for. We've seen that one. I've mentioned multiple times over the past of weeks to say I will wait for that initial wave of short liquidation. The beauty of it is that we just had as much long liquidation, and that's just a prerequisite for massive washing machine type Wyckoff patterns. Though I frankly think many things support that thesis. The second thing that we see is that despite those liquidations, as you can see, the open interest is skyrocketing, which means speculative demand is still there, is still absolutely mind-boggling, but it's truly there. And in that sense, well, I've got nothing else to say, but these are all the necessary ingredients for market makers to lateralize prices in this technical area. Not giving the answer is basically the answer I can give you today. And I think the longer we stay into this area, maintaining maximum uncertainty, the more money the market makers will make, the more money the retail traders will lose into over speculation and all of these biases that we very well know of. So takeaway number 2 out of this thing is, frankly speaking, the only thing that I've been doing personally and that I share for transparency is closing out all my margin trading, which means that everything I was trading on the short time frame, slow following, and things that I've shared previously, I've been taken off. Very nice profits. And even though we might be keep pushing onto this breakout, I think, frankly speaking, it's not a wise choice to keep trading either on derivatives or even margin trading and stuff like that. I'll just take in nice profits. Out of this area, I don't want to be speculating. I just want to be a spectator. I have my longer term exposition to this market. And like we stated earlier, this is an area in which we have nothing to do as long-term investor, but either wait to partial profit take depending on the signals. For those who decided they want a partial profit take, by the way, on my humble opinion, I don't nearly care, or if I have some strong signals, I may consider a slow, tiny 5-10% take profit at best. And depending on signals, and I want to have strong signals. Otherwise, I'm really frankly open to wait until 2026. Even though there is a consolidation of some sort, I don't care. I'm way beyond 2026 in terms of exposition for my portfolio, which means even if we reject, I think that's just to get through this at a later stage, and I'm ready to wait. If you are as well, then, well, frankly speaking, what the heck are you looking at? You don't pay attention to this area. Just let the dumb traders do what they do. Just let the short traders do what they do. Just let the market makers do what they do. But as a long-term investor, there's nothing you should pay attention to here. You can't trade this breakout due to the limitation signals that we have. You can't take profit prematurely for whatever reason just because you think retail crowd is getting crazy. No, surely we have all metrics suggesting that they're getting crazy with a very extremely greed sentiment and stuff like that. We see the liquidations that we wanted earlier. So that's really a critical sign to me to say all the ingredients is there to say stop trading, okay? Stop it. Stop it. This is not an area to trade. This is an area to let the big money make its decision to assess and balance supply and demand. Don't be among those who try to predict and play the crystal ball out there. That's my final share for you guys today. Hopefully, we'll have that monthly close as positive as it could be, and we'll be able to study it right on Monday. Until then, please don't trade. That's all I have to say. I hope the supported evidence today will lead you into that same conclusion. Of course, remember that this is your own decision. I'm not making any financial advice, just trying to present evidence that should lead you in the right direction in terms of professional risk management. Bye, guys.